No, I think that it's absolutely essential that gold and silver be in anybody's portfolio, particularly anybody that has substantial wealth, for the simple reason that paper assets are under attack because of the debasement of money. And I mean, if you want sort of a historical example, I mean, look at what happened in the 1970s. If you had gold and silver in your portfolio, I mean, you offset the fact that in an inflationary environment, the real returns on paper assets, gold, both bonds and stocks, were negligible, if not considerably negative. And if you didn't have to have a lot, but if you had a, say, 10% representation in your portfolio, you skated through with positive returns in the overall portfolio. If you didn't, you had a negative return. So the situation today is infinitely worse than it was then. So I think it's essential that people have it. And the interesting fact is, I would suggest that the vast majority of people don't have it, which gives you sort of a leg up if you got it. And right now, basically, if you don't have it, you'd better be getting into it soon. I think you should diversify. Number one, like the safest way in the earth to hold gold is in your own possession. But then the second safest way to hold it is in an account in a way that the gold is allocated so you know that it's all there. As you're aware, there's an awful lot of paper gold vehicles out there that are essentially fractional gold banking in the sense that there's some gold there, but if everybody asked for their gold tomorrow, the vast majority of people couldn't get it. That is the kind of vehicle you do not want. And then the next way to get it, it's more leverage but not as safe a vehicle, are in gold and gold shares. But I think the core of all portfolio has to be physical gold and silver. Well, I personally would say you should have between 10 and 20% of a portfolio in gold and physical silver today, in the world that we live in today. You wouldn't have said that, say, years ago when financial assets were attractive, but that is not the case in my opinion today. It's always alternatives. When you look at the alternatives are shrinking. Like I think like U.S. stocks, for example, which are very popular today, in my mind are grotesquely overpriced. The U.S. bond market doesn't even deserve comment. There are other bond markets in the world that you may feel somewhat comfortable with, but I think it's a worldwide phenomenon, this kind of currency debasement. So I think that it's essential that people have a greater percentage of their portfolios in gold and silver today than perhaps they've ever had in the past century. I don't have any negative thoughts other than gold and silver are the traditional monetary metals, and that's why you want this stuff today, because what's happening to paper currencies. Platinum and palladium will go up in price in currency, but I don't think they'll go up nearly as far as gold and silver. Like in a historical sense, in financially challenging times, gold always traded at a premium to platinum. Today it's trading at a $300 discount. I think that tells you all you have to know, really, about which of the metals you should own. And gold and silver are the two. I consider this to be wildly bullish in the sense that sort of from say 1994, 95 through about 2 years ago, central banks were supplying considerable quantities of gold into the market. They were supplying gold. And a lot of it was being leased and what have you, so it was clandestine, so the public really didn't know the extent to which they were doing it. But now it is clear that this is pretty well over. I mean, that the central banks that had been supplying gold to the market have lost the capacity to do so because they've already done that, can't do it twice. And as a result, the fact that a lot of the countries that have an excess of US dollars in their possession and what have you are now buying gold, and they're becoming quite vocal about it. This is a spectacular change in the supply-demand equation. I mean, there's way more demand and considerably less supply. And you can't offset it anywhere else. So to me, the only result of this ultimately is dramatically higher prices. That's a really interesting question. I'm in the camp that believes that the currency situation today is so dire that by the time it gets resolved, gold will have to be reintroduced into the official currency market in such a way that the price will be maintained. It's not going to be one of these things like 35 to 800, 850 back to 250. This time it's going to be 250 from the low to gosh knows how high, and then it will be reintroduced back into the system at sort of at near the high level. So I don't see the downside volatility that we experienced coming out of the 70s happening again this time. I think that is definitely not on. Well, I totally agree with James on that. I mean, I think J.P. Morgan said that in, what, 1913, the gold is money and nothing else, and then they started the Federal Reserve 6 months later. But the fact is that it's been historically money throughout sort of centuries. And every once in a while people forget that when they get into another fiat currency experience and everything seems to work swimmingly, and you have sort of an explosion of expansion of debt and everything seems healthy. But then when it all comes to a sad end, then people once again realize that gold and silver are money. And we're just in the early stages of rediscovering that for the umpteenth time. So yeah, it's gold and silver are money. And that is probably the basis for the great debate, because I mean, gold and silver are dissed by so many people as just kind of barbarous relics and static assets and what have you. They just don't understand history, and they don't understand the constant failure of fiat currency. I worry about it in the sense that if the U.S. were left to its own devices, I suspect we would have a lot to worry about on that front. Unfortunately, from their perspective, the world has changed dramatically. The money is now sort of going to the East, and it's China and India, the Middle East, and what have you. These people have a predisposition towards gold. And so if the U.S. and Europe, for example, were to act unilaterally in some fashion to try to repossess or not allow the public to own gold, for example, I don't think it would work, because it would just act as a red flag to all the people who do not think this way, and it would just drive the price much higher. So I don't worry too much about that. I mean, it happened in, what, 1934, but I don't think that is going to happen again.